Hello everyone, this is gonna be my first video. This is Miki from Hedgeline Trading, and I'm essentially a trader in crypto and stocks, but I usually do mostly stocks because that's where I store most of my wealth, and it's essentially going to be more of an in-depth analysis on just equities. I usually get probably just going to cover equities here. Stocks and ETFs, stuff like that, and maybe even commodities, right, like natural gas, oil, gold, and silver. And I'm going to be doing like analysis using market cipher, which is extremely useful in terms of identifying trends and using Elliott wave theory as well. So hopefully you guys enjoyed the video, and if you guys want to subscribe, feel free to like the video, and leave a sub if you enjoy, and maybe even leave a comment. So asking maybe for me to take a look at your stock here. So right now, the markets have had a pretty tremendous run up since the beginning of the year. We're probably up like 25%, if I'm not mistaken, or like even more, 28% from the lows. If we're going from the wick, but if you go from the lows here, you're probably up 25%. So yeah, there you go. So yeah, you're from the lows, you're up a pretty significant amount. But overall, right now we've broken a pretty important trend here, a pretty important trend line. You are starting to see the weekly trend also break on the RSI. You guys can probably tell this by just looking at it, but if you want to draw it out, that's okay. Oh, sorry, that's on the SPY. I'm talking about the Qs here. All right, there we go. But yeah, the weekly trend has broken on the Qs. And if you want to draw a little bit of a better line here, there we go. So you guys can tell that the weekly trend has broken on the Qs, and we're coming up for a retest and potentially could make a lower low. On the SPY, you actually bounced off, right? So if you're looking at the SPY, then technically you've actually bounced off of the trend. But we'll keep a close eye on it on the weekly time frame because things can turn pretty quickly. And if the Qs go down, then the SPY is most likely going to go down as well. Because you are mostly essentially a lot of the stocks inside the SPY are weighted pretty heavily towards the tech sector. Okay, but yeah, let's take a look at the market cipher, and it's going to tell us basically what's going on in terms of the trend. So if you look at the Elliott wave indicator here on the daily time frame, and you look at market cipher, you're in a strong uptrend. You got a lot of green money flow, and you actually just confirmed a nice little bottom here on the daily time frame, signaling that this could be the bottom for wave 4, and we're probably going to head up in a wave 5 to potentially new all-time highs. And this could be supported with the yields starting to pull back here, and if the yields start to collapse in on themselves, then you're going to see a significant move potentially towards the upside in yields. But if the yields go too low, and then that might start to panic people because they're going to be wondering why are yields going down so fast. If inflation is still so high, then the market's going to start to realize that there's something else at play here, and there's probably something bad coming on the horizon. So let's take a look at some larger time frames here as well. So the weekly also showing us that this is also in a wave 5, so this is also a larger wave 5, and it's showing us that it's going up to new all-time highs as well. But what I really like to focus on, and my main theory and my main setup at the moment, is basically what the monthly time frame is showing, and that is a B wave, that we are currently in a B wave up, and we're probably going to top out anytime now, either maybe September, October, and we're going to start to head down towards the downside. We're going to start to make our next leg down, and how low are we going to go? And then that's really up to speculation. Maybe we might not even go that low, and we could continue up towards the upside if we manage to hold 420 on the SPY as support. If that level is able to hold, then you're going to see that the markets are going to still move up, and there's still going to be a lot of buy the dip momentum, and everyone's going to be happy as we go to new all-time highs. But eventually this party will come to an end, and when it does, it's going to be pretty ugly. And we'll have to track to see what the dollar does, because if the dollar starts to uptick here and you have more economic data coming out, that's going to be supporting higher rates, like higher inflation, increase in CPI, increase in PCE, increase in PPI. Then you're going to see the dollar most likely move higher, and yields are going to reverse back up very quickly. So again, yields are very choppy and sloppy at the moment. Nothing says that they can't, go higher. If anything, they're most likely going to go higher over time in the bigger picture. Like, yes, yields could start to pull back if the markets crash, but eventually you're going to find that there's going to be a floor on yields, most likely around the 3% area to 2.5% area. You're not gonna see yields go past below that. I'm hearing, I keep hearing people saying that they can't wait till yields go back to like 0%. I think we've most likely, ended that trend. A while back. You guys can probably tell we've been essentially in a 40-year downtrend here in the 10-year yield, and it's now broken out towards the upside, and it's probably just consolidating before its next move up. So just pay attention to that. And again, I made some notes to myself there, but yeah. So I think yields overall in the long term are going much higher, which is going to be very bearish for the markets, because we don't want yields to go too high here. And then if I take a look at the triple Qs on the monthly look like they're going higher, but right now you actually have a decrease in green money flow. And again, things can take a turn very quickly with the markets. Let me just see if we can do an inverted pattern. Maybe it's going to show an ABC wave, maybe on the monthly. No, it's not showing that. But the overall, what I would be doing is tracking for an ABC pattern on the larger time frames, something like this, right? And then you got your B wave, and you're probably going to start to top out around here. And then you're going to get ready to move down in a C wave. But overall, not very bullish in the markets in the coming year. So you can see we were in red money flow, and now we are, coming back up in this green money flow wave. And then you got a red, you got this top that we got a couple of weeks ago, which was also supported on the SPY with some high volume candles. And that's what I've been looking for, is those high volume candles to sell, like with those 100 million candles. So you saw this one was 92. I think this one was 93, and then you got 100 million, and you got another 93 here. And again, this was a lot of panic and a lot of selling. Another $95 million candle there. So you got a lot of panic, that was starting to grow and grow and grow. And now you're starting to see a lot of bullishness again, the fears subsiding, and you just really want to be careful. You do have a gap fill right around this area at 456, and you do have another gap fill on the Qs as well. And the Qs, again, take a look just at the gap fills here. You have a significant amount of gap fills to be filled towards the downside. We actually filled this one, and that was actually marking our low, and we bounced off of that level pretty nicely. We opened there, and then we just kept rallying back up towards the upside. But overall, the markets are in a pretty dangerous spot at the moment. The bulls really need to defend this area, and if the bears are going to attempt anything, and then it's going to be coming in a few days, most likely after the long weekend, because market crashes don't really happen before the long weekends, but we'll have to see. Okay, essentially this is basically what I wanted to talk about. I like to go a little bit more in depth, and I'll probably be doing some live streams here for you guys from time to time. But overall, I really enjoy talking about the traditional markets and stuff like that. You guys can see also that the reason why I'm quite bearish as well is that you're not seeing that much market participation in the other smaller stocks, but you saw the mega caps rallying nonstop towards the upside, and then finally you got a pretty worrying breakdown in Apple, which actually brought it down like 10-15% or 10-12%, and now you're back essentially in a B wave. And I think that you could be coming back up to this gap fill area, and then you might start to head south once this level hits, back down into a C wave, and then you might complete your first wave 1, and then 2, and then 3, 4, 5. And again, I have nothing against Apple, right? I lie. My phone is an iPhone, right? So I have nothing against the company or any of the companies that I trade, right? I'm not buying a stock because I love the stock. I'm buying and shorting based off of technicals, and again, that's what I do for a living. I do a lot of trades, and I share my trades inside my community, which, by the way, I'm not ready to reveal to anyone yet, who is new to subscribing to Hedgeline Trading. And again, hopefully I'll get some more videos out to you guys. And if you want me to take a look at some stocks or some indices or anything really, I would be more than happy to help you. All right. Thanks, you guys. Love you all. And have a wonderful day.